Investing as a retiree used to be easy. You just bought bonds, but in this low interest rate environment, that's no longer the case. Joining me today, you're not seeing double. Fross and Fross, a firm in Central Florida that mostly works with retirees. I have Rob and Tom here to discuss what retirees should do with rates this low. It's almost as if you're 65, you need to invest like a 35-year-old these days. One of you explain why retirees have to be more aggressive than they might have, a few years ago.
Well, in the old days, when a person retired, they were looking at 12 to 15 years in retirement. Now a 65-year-old's looking at a 1 in 3 chance that they could live till they're 95. That's a 30-year retirement. So if they were to be too conservative, that could completely blow up their retirement plan.
And to add to that, their parents' retirement was real simple: invest in CDs and bonds and take the income off of it. And now with interest rates being at historic lows, that becomes a real challenge for the average retiree to get the income that they need for their lifestyle.
Now, do you find that your clients, and we're talking Central Florida, the Villages, huge retirement community, are they angry about the fact that interest rates are this low, and are they blaming the Fed, which has been keeping rates low via quantitative easing and other measures since 2008 now?
By and large, they're frustrated that interest rates have stayed low for so long, and I think there's a continued feeling among them that to stimulate the economy, the Feds are doing that on the backs of seniors, because really, who has money that's sitting in cash and CDs? For the most part, it is seniors, and now receiving an interest rate that historic lows.
I understand that some of your clients are also looking at commodities, even with the big plunge in gold. Explain why you think maybe silver is a safer bet for a conservative investor than gold.
Well, by and large, over the last couple of years, a lot of attention went to gold. And of course, we all saw that. We all saw the commercials on TV advertising gold. And of course, historically, those commodities have been a great play against future inflation. And now with gold kind of going out of favor, people have looked at some other resource that might be able to fill that void. Perhaps not for the growth that they got for gold, but at least as a currency hedge. And I think that's where silver has come into favor.
And I can think of 2 specific reasons why clients today are looking to that. First of all, historically, silver's traded at right around a ratio of about, gold's trade about 15 times silver, and right now it's trading at 51 times silver. And so it's relatively inexpensive compared to the run-up that we've seen in gold. Also, it's an indispensable commodity. It has industrial purposes that gold simply doesn't have.